Hello students, now the topic we are going to discuss is journal entry, the second part. Now see to this video fully and understand the concepts. This video which consists of fully the practical sums. Now we are going to learn the transaction, how to analyze the transactions. Transaction number 1. 2020 August 3rd, furniture purchased for cash rupees 10,000. Now we have to analyze the transaction. What type of transaction is it? Is it cash transaction or bank transaction or credit transaction? Now it has been denoted as cash. So it is cash transaction. When you are analyzing the transaction, what are the steps to be done? Accounts involved. What are the accounts involved in this? Furniture account and cash account. A furniture is an asset. So it comes under the category of a real account. Even cash is also a real account. Now you know already the double entry system of bookkeeping. Under the real account, debit what comes in and credit what goes out. So we are going to apply the rule. When you purchase the furniture what comes in? Furniture should be debited and what goes out? Cash. Cash should be credited. Now, we are going to write it in the journal entries. The first you have to give the heading in the books of Mr. Ram. Journal entries. Date. When you are mentioning the date, the first is you have to mention the year. Then you have to mention the month and date. The first row, we call it as a debit row. Now, what comes inside? Furniture. When you purchase the furniture comes inside. So, furniture what comes inside should be debited. So, furniture account debtor. And what goes out? Cash. To cash account. That should be represented in credit line. Now, the furniture debited, what is the debit amount? Debit amount is 10,000. The debit amount should be equal to credit amount 10,000. This you have to mention in a narration. The transaction that should be mentioned in short in a way of narration. So what has purchased? Furniture purchased. So this is the journal. Then next transaction we can go. 2020 August 4th, machinery sold for cash. If you sell the machinery, what comes in? Cash comes in. And what goes out? Machinery goes out. You say that cash and machinery both are assets. So both are real account. Now we are going to apply the rule. You know already double entry system of bookkeeping. Under the real account, debit what comes in and credit what goes out. Here what comes in? Cash comes in. That should be debited. And what goes out? Machinery goes out. That should be credited. Now, let us write the journal entry for this. The first is, you should mention the year, then the month, then the date. Date is 4th. What comes inside? Cash. Cash should be debited. Cash account debtor. What goes out? Machinery. To machinery account. Cash account debtor. What is the amount? Debit amount 20,000. to missionary account. What's the credit amount? 20,000. Debit total should be equal to credit total. And mention the narration. Missionary sold. Missionary sold. The next transaction, we can move to the next transaction. 2020, August 5th. Paid rent, rupees 10,000 in cash. So here, rent. You have rent account and you have cash account. Now, you have to find out the nature of the account. Now, rent is what type of account? It is an expense. Since paid rent, it is an expense. So, it comes under the category of nominal account. And cash, if you pay the rent, cash what goes out? So, cash is a real account. In nominal account, rent paid is an expense. All expenses should be debited. Expenses should be debited. So, what should be debited? Rent should be debited. And what goes out? According to the real account, cash goes out. Cash what? Goes out. So that it should be credited. So what is the journal for this? First you have to mention the date 2020 August 5th. Rent account data to cash account. So rent, what is the rent amount you have? 10,000 rupees. Debit 10,000 and credit 10,000. Narration, rent paid. So narration. Now the next category, we are going for the next transaction. So what is the next transaction? 2020 August 6, purchased goods for cash. Purchased goods means it is an expense. It's purchases. You are buying the goods. So it is an expense. We say it as a all expenses should be debited. It is nominal account. If you are buying the goods, what goes out? Cash goes out. Cash is what type of account? It is a real account. Nominal account, all expenses debited. What should be debited? Purchases should be debited. Then what should be credited? What goes out? What goes out when you purchases? What goes out? Cash goes out. So cash should be credited. Now let us write the journal entry for this. 2020 August 6th journal entry. Purchases account debtor to cash account. Your debit line is, what is the debit amount? 1,000. Similarly, your credit is 1,000. Narration, goods purchased for cash. Okay. Now, we are going to do further sums in the next videos. If you are interested, subscribe to this channel and share with your friends and do the likes. Thank you.